What's up, guys? Today I'm going to talk to you about the top 3 things you need to know when buying your first business. I've been talking to a lot of clients lately that are looking to buy their business or their first business, and there's a lot of things that sellers are trying to sweep under the rug and fool people into buying their businesses. So I'm going to tell you the top 3 things you need to look for before buying your first business on today's show. What's up, guys? My name's Chris Warrens, founder of Warrior Consulting, and I help entrepreneurs in their first year hit the 7-figure mark and scale past to the multi-million-dollar mark. And I work with entrepreneurs internationally on how to do so with them and their teams. Listen, on this channel, I'm going to teach you exactly how we do that, tips, tricks, and the secrets. So enjoy the show. Number 1, the sale price is typically a multiple of the owner's benefit, or known as net profit of the business. That sounds a little complicated, but listen, it's a multiple of. So what does that mean? All right. The sale price of the business is typically a multiple of the owner's benefit. So let's use an example. Let's just say the owner's benefit is $100,000 a year, meaning the owner makes $100,000 a year. Okay. Now we have that $100,000 a year. Now we have to understand the multiple of, right? Each industry has a different multiple or multiplier. However, it's typically between 3 and 6 times the owner's benefit. So let's say you're buying a construction business and the multiple is 3 times the owner's benefit. So if the owner is making $100,000 a year, the sale price is typically 3 times $100,000, which is $300,000. The multiple is 3. The owner's benefit is $100,000. 3 times $100,000 is $300,000. Now, the asking price might be millions, but the typical sales price is the industry multiple times the owner's benefit. Here's what I've been finding working with clients is lately, specifically people buying their first businesses, owners are not disclosing their tax returns. Guys, if you're going to buy a business, the owner has to disclose the tax returns so you know how profitable the business is on papers. Don't take a P&L, don't take an income statement, tax returns. Money talks and bullshit walks. And if they won't provide their tax returns, offer to provide them with an NDA, a non-disclosure agreement. If they still decide they're not going to provide their tax returns, they are hiding something, and that is a bad deal. You're going to need to walk on that note. Walk away from the deal. Number 2, and this is something that a lot of people find out the hard way, like I did, and don't know about. All right. The sale price of a business isn't typically the most important thing. What is the lease. The lease, if it's a bad lease on the building or the space, it's going to destroy your business. It's going to bleed your business out. Leases are very complicated. Leases are put in place and they have renewal options, and they have increases with the renewal, meaning increases in the rent and increases in CAMS charges. And a lot of landlords are very savvy. Most commercial property landlords are wealthy and they're very savvy, and they know how to put leases in place to first-time business owners to suck all the money out of the business on the lease from the start. And if the business owner can make it through the initial 3 years or 5 years, the renewal options will crush them. I've seen it time and time again. And what you need to understand is when you're negotiating a business, if there is a lease in place for the business, you have to look there arguably first and understand the technicalities of the lease and the renewal options. I would advise you to bring in a high-level business consultant or very good attorney when it comes to leases and negotiations to look at that lease before you start making offers on the business, because you need to know if that lease is going to put you out of business or not. Look at the leases, guys. Trust me on this one. I made this mistake early on in my career, and I've seen too many people make this mistake as well, and that's why I'm teaching you this lesson today. All right, number 3, liabilities, right? What liabilities does the business have, if they have any? These are things you're going to want to look into. And some examples of liabilities would be pregnancies. Now, I'm not saying a team member who's pregnant is a liability. However, for you buying your first business, and if you keep that person on as an employee and they're pregnant, you need to understand your financial liability to that person and or their family, because you are buying your first business, you're depending on this person, and then they're soon not going to be in your business for an extended period of time, and you have to be able to forecast that financially. Try to understand what I'm saying. It's a financial liability from a business owner's perspective to understand their cash flow. Other liabilities would be litigation. Are there lawsuits in place? Are there lawsuits brewing? Have there been HR problems? Has there been cases filed of HR things within the company? Is there bad publicity with the company that could become litigation? And litigation, guys, means lawsuits. Litigation means attorneys. Litigation means money that you have to spend that you might not be expecting because you're really excited to buy your first business. Another liability could be customers. Take a look at the reviews of the business. How are people talking about the business? Are people really pissed off and not happy with the company that you're buying? If that's the case, you could have potential long-term damage to that company, brand, and those customers talking negatively about you and the company, which would be considered a liability. So you really have to pay attention to the liabilities too before you jump the gun and buy a business and not know about the liabilities that come with it. All right, guys, that's what I got for you today when it comes to the top 3 things you need to know when buying your first business. Now, remember, this statement, the top 3 things you need to know when buying your first business, comes from me working with entrepreneurs and people that want to become entrepreneurs over the past quarter, buying businesses and not knowing these 3 things. These 3 things will save you millions of dollars if you understand them before you buy a business. And all I ask of you is to execute the knowledge that I teach you to save yourself time and money. Now, listen, if you have questions about anything that I've talked about or want to know more, drop a comment below. Definitely smash that like button. And if you're not subscribed, guys, I'd be grateful if you did subscribe. I hope to see you in the tribe and the community that we're building, and I'll catch you next time.